All right, welcome everyone to part two of the week, part two IMR for the week ending Friday, 21 April. So today is Sunday, 23rd of April. Yesterday, Saturday on 22nd, we had finished part one, and now we are getting into the part two. Uh, and as we said in the part one, it's a pretty divided market, and it's interesting about where the market would go. And so there are some stocks which are really bullish. On the other hand, some sectors rather which are really bullish. On the other hand, there are a lot of other sectors which are quite bearish. So pretty divided market. And I think the best thing is have a look at all the Nifty stocks and take it from there and see what the Nifty list is going to tell us. However, like I said, quite a bit of the mid-cap space is quite strong, and those of us who are interested should have a look at that for on the long opportunity side, uh, and we should definitely be looking at uh, the small cap or the mid cap space in case anybody's looking for good long opportunities. However, the large cap space is a mixed bag. So without further ado, we're jumping into the Nifty set of stocks, and definitely not all, but we'll review uh, most of them and see and look for any really good setups which may be there in the Nifty stocks. All right, so just going in an alphabetical order, looking at ACC. So clearly ACC is now on an uptrend and likely to keep going higher. Having said that, it is showing some amount of weakness on the top, a sort of rounding pattern. We'll have to wait and watch to see how that pans out. However, a good buying opportunity with the stop loss below 1413, 1411, and the real test will be for it to cross 1550, and if it can do that, then all the way to 1750 is a distinct possibility. As you can see, hasn't really done anything for the last 3 years, so this is a stock which is in the multi-year time frame consolidating and needs to probably will eventually break out. Ambuja Cement, if you can see, I clicked it, more or less a copycat of ACC. If you toggle between the two, there's really not much of a difference. Without knowing the name of the ticker, you probably not even be able to make out the difference. And that's also on an uptrend. And what's interesting is, as far as Ambuja is concerned, very close to the uptrend line, I would say, and to that extent a lower risk proposition than ACC. However, selling has happened on high volumes in the last 1 week, so would be a little cautious before getting too aggressive on the long side. However, having said that, if it has to break 230, 228 before one can be sure that uh, uh, this could actually go higher. Right. Okay. So that is Ambuja, and then while we are at it, we'll complete Grasim. Okay, so Grasim really took off, and you can see that it has actually made a very important and very significant new life high. And the thing about Grasim is that Ramesh informs us is that last week the FDI cap was raised on Grasim, and then it has just taken off after that. And just to look at that, this up move clearly happened on some really good volume. So technical breakout, come buying opportunity for the FIIs because the FDI cap was raised. So unlikely that this stock is going to really, come down too fast, and probably that we will see this, going higher only. If it does come down to about 1050, that will be the time to sort of go back in and see if that's a buying opportunity to get in again on the long term. Maybe now a little bit of a, after every time it moves up sharply like this, any stock for that matter, whether it's a good time to get in or not is always one debate. But I would say that yes, if it comes to even about 1100, that would probably be a good place to buy. Target 1200, 1250, and the stop loss should really, a good stop loss really is only below 1051 or so. All right. So those were all the cement stocks in the Nifty pack. So let's move on with the others. Asian Paints. Um, sort of haven't reviewed Asian Paints for quite some time. Okay, so this is looking really interesting in the sense that might have lost its strength, I think, for now. You can see that the volumes have considerably reduced in the last one quarter as it goes up, and earlier the selling was on high volumes in the last quarter of the previous year. So really unlikely that this could go up in a hurry. However, having said that, in terms of a setup, really good setup in terms of low risk. Um, you have all the long-term moving averages all bunched up here, and as it heads higher, or rather it heads lower, there could be a good low risk buying opportunity. Having said that, it is moderated by the fact that we have this short-term downtrend and we do not see any volumes on the way up. So probably better to wait and watch. All right, now coming to banks, starting with Axis Bank. So clearly Axis Bank sitting at a very important support level over the last many almost since November, so almost about 5-6 months. Having said that, you will see later that there are some actually much better setups. This one, mixed bag. Banks are actually a pretty mixed bag right now. If this does well, then this could really move up. But you can see that the selling is happening on higher volume. So I would be a little circumspect about this right now, and maybe a long only if it can cross 500, 510. And if it breaks below 480, 478, then definitely a good shorting opportunity all the way to 460 or even 450, right? With a stop loss at around 487, 488. So while we're at it, we'll look at some of the other banks in the Nifty, and that's what I meant by a good opportunity. HDFC Bank has clearly, you know, uh, gone to another new life high. Um, Mid-Feb, there was this news about that because of a foreign bond conversion or something like that, I'm not sure about the details, that more FIs could buy. So just like you saw in Grasim, there was a big spike up at that time, but it cooled off and then has consolidated basically between 1,400 and 1,450 for almost about 1.5 months, and now you're seeing the move up, and it has happened definitely on high volume. So 1,500 is the next target, of course, psychological mark, and then after that it will probably move on and go even higher. So yeah, HDFC Bank definitely looking like a good potential opportunity. So you saw that Axis Bank on the other hand was perhaps probably a bearish opportunity, while HDFC Bank on the other hand a pretty bullish opportunity. Now in the same token, you can see ICICI Bank is a pretty bearish opportunity, right? And actually even a gap down here on ICICI Bank, taking support at its 100-day and then at its 200-day moving average. And I suspect that this is actually going to go down further, maybe even all the way to 260 or 255. Does not look like it's going to really bounce up technically speaking at this point. We'll just have to wait and watch. So this is the resistance level to watch out for on the way up, and right now sitting on a very critical support. So coming next week, you should probably look at this level carefully, 265, 270, and see how the market behaves around that. If it can hold this, then this is definite. I mean, those it's the my bias is that it's probably going to go down. You could take a short position with a stop loss at around 271 and a first target at around 260, then 255, and then even 250. On the other hand, the 200-day moving average has already given support on it about 3 times in the past. Here is one opportunity, that's the second time, and this is the third potential time. However, looking at the way the volumes are increasing, one would have to be very careful. Having said that, if it on Monday, Tuesday, it were to come down to around 265, 268 and seems to sort of take support there intraday, then one could actually look at going long at that with a stop loss around 264 and then a target around 280. Right? So that's definitely a possibility on ICICI Bank. So whether it's going to be bullish or bearish, I think best to wait and watch Monday, Tuesday, and then take a call on how it behaves around the 200-day moving average. Then IndusInd Bank. So IndusInd Bank has been making new life high and has been going up. However, you can see that of late in the last you know most about 2-3 weeks, while it has gone higher, it seems to have topped out there at around 1440. Plus you can see that the candles are becoming smaller in terms of bodies, the shadows are becoming bigger. That would be the sort of return line, and added to that is the fact that the MACD is showing negative divergence, and so is the RSI. So however, if it's a good strong uptrend, which it has been for since Jan, one could ignore this, but I think the way it is panning out, I would not be too much of a hurry to buy this. So if there is a correction, then this one is perhaps a good one to short. You can see 4-5 highs there at almost the same level. So with a stop loss of around 2448, sorry, 245859, one could short this, and perhaps it will go down all the way to 1380, 1360. And it's definitely run away quite far from the long-term moving average. So 1220 is also something which is a remote possibility right now, but could definitely happen. That's just about a 12% correction, right? So IndusInd Bank looking bearish with a bearish divergence. Then Kotak Bank. So Kotak Bank looks like a tweezer stop right there at 897, 900 virtually speaking. So not really able to break 900 right now. Volumes have also come down by about, I would say, 50%. So while I wouldn't say this is necessarily very bearish, it is at best consolidating, and or rather at the very least consolidating and probably making up its mind as to what it wants to do. So a good signal can probably only be given if it can break 900 on good volumes, then definitely long. But on the other hand, if it comes to even 870 or 870.50, then one could look at going short with a stop loss around 880.82 and a target of 840 rupees. Right. Okay, so that's on almost all the private sector banks within the Nifty. And looking at public sector banks, the State Bank of India really going the other way around, broke the support also. Of course, that's support based on highs, and there is support, as you can see, it took support at the 50-day moving average and just bounced off from that. But nothing in the indicators or in the volume or anywhere else on the chart to suggest that this might be a good buying opportunity. It would probably be better to stay away on the long side. If it comes down to around 260 or even 265, then maybe we review it at that time and see what the charts are saying. Again, this is like ICICI Bank sitting on a relatively important moving average, and the moot question is, will this moving average break or will it not break? So I think that is just best left to time, and we'll see how the markets react to that. So you could, at around the 280, for the first who are into options, you could look at perhaps doing a, long straddle and see, I mean, a bi-directional um, trade that would be, if it goes up, you'd make some money. If it goes down, you'll make some money, and then take it and then see how it works out. Okay. PNB. All right. So, surprise, really not showing a lot of weakness at all. PNB, as a matter of fact, relatively speaking, given all the other banking stocks we have seen so far, I would say this is actually looking quite healthy, and would not be willing to either, definitely not willing to short it, might actually be willing to go long on it. But given the overall sentiment in the market, be a little circumspect about that. All right. So I think let it make up its mind. So I'm going to pass on PNB. If we look at Bank of Baroda, well, sitting on important support, again consolidating for almost 7-8 years, really not doing anything. If you look at it in the long term or even in the monthly charts, you know, a lot of activity in 2015, 16, and now in 2017. You can see how in very little activity in 2010, 11, and 12. All right. So if 185, 200 breaks, then that will be really a great breakout. And I think for long-term investors, Bank of Baroda is definitely looking good. From short-term traders' perspective, I would perhaps be a little circumspect. The chart's not really clear what it wants to do next, so best to stay away. However, lots of support all the way till 160, 162, and if one can take advantage of that, then there is definitely, as it comes lower, maybe buy. Then there's definitely some opportunity there. Otherwise, the 175 long straddle is definitely one of the opportunities to think of Bank of Baroda. Okay, looking at the list and to see if there's any bank I've missed out. I don't think so. Right. Not a bank, but let's look at HDFC. and actually many of the housing finance company stocks have made new life highs, so you may want to review those charts with the LIC, DHFL, um, what else, Canfin Homes, I think, etc. So have a look. The entire sector along with realty seems to be doing quite well. Too early to say. uh, Sorry, yeah, it's doing quite well. Now here what we see is sort of consolidation going on between 1550 on the higher side and 1475 on the lower side. Breakout has not yet happened, so that's the thing to watch out for on SDFC, right? So pretty mixed bag, though more I think uh, bearish than bullish as far as the banking space is concerned. All right. Okay, so let's look at I just saw BPCL, so I thought why not, let's have a look at BPCL. So I'm not sure on what account, but there was a 3 rupee hike in petrol prices in Mumbai or the entire Maharashtra yesterday or day before yesterday. I think the local taxes have been raised, right? So that is right, one thing to keep in mind. Not that this affects any of the oil refining companies at all. That's a taxation issue, but BPCL definitely sitting at potential breakout. There's probably a flag. There is a flag here. So from 640 to 730, almost 100 rupees, 90 rupees. And if it breaks out from here, then we're almost talking about 800 rupees as the next target. So BPCL, I think, definitely something one should keep in mind. Going to Hind Petro, while it's definitely not a Nifty stock related to BPCL, they move together a lot in tandem. Uh, okay, again, a sort of what would I say? Consolidation seems to be going on, waiting for an up move. However, unlike BPCL, which I think is likely to go up stronger, this one has a resistance at 580, and we'll have to see how it reacts at that 580 mark. It's a little, definitely a lot more gradual move than in Petro than we've seen in BPCL. All right, so that's the uh, oil marketing companies. The BPCL chart definitely looking more attractive, a better risk reward setup, a better low risk setup, and a better pattern in BPCL versus in HPCL. All right. Uh, Next, okay, let's look at Bajaj Auto. So clearly that's just consolidating sideways. Sometime it's going to move either up or down, 3100 or sorry 3000 or 2700. I think is what it'll probably do. One of the two. Not sure which. Let it make up its mind, then we'll take a call on that. Remember, we are in the midst of what results. So stocks are probably going sideways, waiting for results to happen, and only after results happen, we'll get some directionality on what is going to happen on the trend side. Okay, Hero Motors. So that's also very much like Bajaj Auto, just going sideways. It's right side right now, sort of trapped between the 200-day moving average and the 100 and the 50-day moving average. Considerable reduction in volumes, as you can see. So it'll have to decide what it wants to do, whether it breaks down from here or breaks out from there. from yeah. So I think one of the things to keep in mind is to keep a event calendar in front of you to know what results are probably coming up in the coming week, and if any of these stocks are in that list, then at least to wait till then, let the event pass, and then you can take a call as to how you want to trade that once the stock has decided whether to go up or to go down. Okay, so both Bajaj and Hero Motors going sideways. To look at Maruti four-wheeler stocks. So this is looks like it is more wanting to go up than wants to go down. However, what you can clearly see in Maruti's uh, weekly chart is a bearish divergence. Uh, so that is definitely a bit of concern, and one should keep this in mind before one gets too aggressive about going long on Maruti. Okay, again, wait for results and then you can take a call if the results have already not come out as far as Maruti is concerned. Okay, so looks like 6,200, maybe even 6,500 would be top sort of forming in place for now. Though it is definitely a pretty strong 2-year uptrend or even 3-year uptrend. However, on the fundamental side, stock is pretty expensive, and we'll have to see whether there's some correction that happens because of valuations. Um, but technically, also looking like possible bearish scenarios coming up. Uh, on the upside, if it does go up, I doubt whether it will be able to go below above 6,500 for now. But we've had 2.5 months of consolidation. Watch carefully. Again, no clarity on the chart right now, so we don't have clarity on the trade direction. So we'll just stay put for now. M&M, well, more or less the same story as Maruti, as you can see. If it does break 1250, I think M&M could easily fall somewhere close to 1200, and the stop loss for short would ideally be above 1300, 23 rupees higher. That's where a lot of resistance sort of ends, and if it's a short, then 1300 and higher would be the stop loss. If it breaks 1250, then one should go short on it with a stop loss at around 1280 and a target of 1200 or 1210. Right? So that is M&M. Again, consolidation going on, and I think that's the main story as far as did I miss any Tata Motors. So looking at Tata Motors, well, this is definitely not consolidating. As a matter of fact, weakness definitely on the charts, though it is coming to a important support level. So that's the important thing as far as Tata Motors is concerned. You have it at 440, and whether it holds there or not is what we'll wait and watch. So sort of interesting. This will definitely be of interest from an academic perspective. This could be a triple bottom that we are looking at in Tata Motors, right? So that's one bottom at about 440. Uh, Sorry, this is the one bottom that I was talking about. There one. This is two, and this could be three. And then does it really take off from there? Other things to track while in case you are looking at going long would be this sort of downtrend line, and the earlier it breaks that, the more strength it will have, and of course the breakout has to happen on volumes. So one could, again, mixed bag, one could take a long position around 435 with a stop loss around 428. The first initial target around 460 or even 450, but if it breaks that 460 465 zone, then I think 480 will very quickly happen, and then even 500. On the other hand, if it breaks 430, then we could definitely see fall by I think at least till 420 or 400 and then a stop loss above about 440 to 443. All these are spot prices, remember, would be something that you could have a look at. Okay, so that's Tata Motors. Now so auto, like we said, in the index side, definitely weak, and I think now we have more clarity as to why the bearish bias is there in the auto index. Okay, next, just looking at the list, let's look at Bharti. So one of the things about Bharti is for 8 years it really hasn't made any money, something that we have mentioned before, and more or less in the same zone. Don't really see why we should break our head on that till there is some clarity about whether it's perhaps going to go up or go down. A lot of event risk, not only results but what Reliance Jio, Vodafone could do, and I think more and more people are looks like getting quite unhappy with Bharti's service, whether it is billing problems or um, access issues, technical issues, signal issues. Um, I don't know whether it's the competition that is taking a toll or it is something where their internal processes are not really up to the mark. All right. So tough call, but the 340, if anything, you could take the long straddle. 340 call plus the 340 put, and whichever way it moves, you would make some money. All right. So for the sake of completion, though it's not a Nifty stock, looking at RCOM, well, really been beaten down, and looks like maybe even lower life highs would definitely happen. 600 rupee stock in 2008, and this is now a 33 rupee stock in 2017. It does not look like the worst is over. However, if it did at some point come down to its life low, which is at about 30 rupees, one should put an alert there and see, watch carefully how it pans out. If it 30 rupees, or it's 33 now, so basically another 10% fall. After that, if it holds that 30 rupees, then this could easily be a good trading opportunity to get in, with the view that if it goes back even to 35 or 40, you would have made about 20 to 50%. So for now, wait and watch. It could be a downtrend flag that we are looking at, and suddenly it would break down to about 32 or even 30 rupees 50 paisa. Okay. Now I think idea has been removed from the Nifty. However, since it's there on the list I have right now, I'm just looking at it, and since we're looking at telecom. So idea will probably get delisted sometime soon once the Vodafone merger gets over. And a lot of event news and event risk, which could be both good or bad, is quite possible in idea in the coming few days and weeks. Actually, I'm not even sure. Suddenly getting a thought, I have to update my list whether idea is even a Nifty stock anymore, or it has been removed due to all this mergers and this merger talks that are going on. Okay, so that's about the telecom space. Next, coming to BHEL. looking strong in my opinion. It's has to cross 180 or it has to fall below 165, 160. That will be the bigger test, but bit of a runoff has already happened. In terms of even structure, I would be a little circumspect. So while it is bullish, it's not a safe thing for a trader, so I would let it pass. Okay, looking at wash. So this is again going sideways, really nothing much to say. Sitting on long-term moving averages, may break out or break down depending on company news. Until such time the risks are high, so best to stay away from something like this. Okay. Yeah. Okay. Now coming back to our list, looking at Kane Energy. All right. So whoa. So what a recovery Kane had from its lows. 120 rupees has become 300 rupees. Those of you who are regular watchers of the IMR know that we gave a long call on Kane a few months back, a couple of months back, on the basis of both technical and fundamental reviews, and also the fact that global crude oil prices were going up. Well, now the story may have gotten over. You're seeing three red crows or three black crows if you prefer on really high volumes, and it was preceded by a bearish divergence. I think if it breaks 470, 471, which there's a good possibility of that happening, then a price to 260, sorry, yeah, breaks 270, not 470, 270, 270, 268, then a fall all the way to 250, I think is definitely on the cards, with a stop loss at around um, 285. I wouldn't want to consider going long on Kane right now, given also, so if I put this as the return line, you will see that in the indicators there is definitely a decent amount of bearishness. So, and you can see the high volume selling that has happened in Kane. So good shorting candidate, I would say. Good short at even current prices with a stop loss above 289, 291, and the big move for a trader would be if it breaks 273, 270, and then all the way, quick fall to 250 is a distinct possibility on Kane. Okay, so since we are discussing energy, is Coal India here, and that's clearly not been doing well at all. Whether the low volumes that are there are a hopeful sign, I think it's too early to say. As you can see, it is sitting on a very important, almost 7 year multi-year trend line, and is it going to break or hold that line at around 275 is really the moot question. Looking at Coal India on a weekly chart, you can quite clearly see that looks like it's more headed down than up. I would be short on this with the stop loss around 286, 287, and the first target between 275, and then we'll review it after that. So that's Coal India for you. Then looking at Pharma, Cipla, clearly bearish, I would say. Clearly bearish. It was already being sold off for the last 2 weeks, as you can see on high volumes. Finally broke this support at around 570 and now at 564. At least 500 I think is going to happen. 540, 520 is not very far, and will definitely go down with a nice stop loss above 477. Sorry, 577, 578. Okay. Okay, Dr. Reddy's. Alright, so been in a fall for the last 3-4 months, but now question is whether it has stabilized, not stabilized at a good support level. It's quite possible that it has, though again too early to say. So I would prefer to leave this, though the candles are quite strong, especially the red ones. The volume, however, is sort of settling down. Maybe a good buying opportunity. Really, okay, mild bullish divergence is definitely there, and one might want to sort of look out for that and see how that pans out. Okay, so this is Dr. Reddy's. If this support breaks of 2600, one could consider shorting it with a stop loss above 2636, and the next stop would be 2400 at least. But at this point, definitely no strong longs on this. Maybe if it settles down for a couple of more weeks, we could consider that. So that was Dr. Reddy for you. So we did Cipla, Dr. Reddy, and then moving forward, looking at Lupin. Alright, so you can see the gradual decline in Lupin in the last 2-3 months, just heading down, and getting support at 1400 on quite a few occasions. Now whether this time also it gets support at 1400, volumes have definitely dried up in the last 1.5 weeks for Lupin, and it's possible that we're looking at a very good setup for going long at price above 1405, 1411, and a very strict stop loss if it breaks 1400. Though here probably for some mysterious reasons it went to 1382.6 on the low side. It should not break that. Again, may or may not be a good buying opportunity. Best to wait and watch and see how this settles down. Okay, so that's Lupin. Sun Pharma. Well, there you can see how it just broke that support on good volumes, and most likely Sun Pharma is going down. So one more good shorting opportunity with a nice stop loss above 665, 670, and if it goes down then 520, 525, and even 610 are distinct possibilities. 600 could also have come on the stock. It's already almost 50% below its life high and close to this important sort of support band, I would say, between 550 and 660. So does it take support somewhere in this zone, and does it turn back up, or is this something? I think from a short term, as in 2-3 days perspective, it is a good shorting opportunity, and over the next many weeks it might actually turn out to be a good buying opportunity. One of the big problems with the entire business as such of pharma is Trump looking at buy US, and if that happens, they're going to take a much bigger hit than has been discounted into the price at this point. All right, so that is pharma, almost all bearish except a few potential long opportunities, but again that's also pretty questionable. Okay, let's look at metals, starting with Hindalco. So metals have been pretty bearish. Hindalco seems to have topped out at around 200. Good ride from about 70 rupees all the way to 200, and has come to a multi-year resistance zone of almost 12 years, 10 to 12 years. Now whether it can break that or not, I think only, of course, only time can tell. But after such a good move, one-way move almost from about 60, 65 to 200, I somehow doubt it's going to keep rallying up. If you look at it on a weekly chart, right, you can see the rounding top on the Hindalco very clearly, and really the question is, will it break this or not? And that price is around 180. Going back to daily, right, so 180 is where the a good support is, psychological sort of rounded off number, plus that's where the 100-day moving average is. If 180 breaks, then I'm quite sure it's going to quickly fall to 165 towards the 200-day moving average. And you can also see in the last 1 week a lot of upper shadows, so a good stop loss would be above 191, 192 if it goes there. So if it's here, I think definitely 192 is a good stop loss. First target 180, and then if 180 breaks, then 165, 168. Right? Okay, just a second. All right, so that was Hindalco. Let's look at Tata Steel. Well, wow, what a fall. So from 500, it's fallen already 10% to 455. You can see that in case of, just in case, it's a good example. So you had this nice run up in Hindalco. Similarly, you had this nice run up in Tata Steel from 200 to 500 levels. And only now that's a weekly chart that we are seeing now. And only now we are seeing any, this is a weekly chart again, to any meaningful, I think, bearish turnaround, and you can see that the volumes are also picking up on the weekly chart, and similarly on the uh, daily chart, right? So right now it has broken through the 50-day moving average, and also importantly the 50 and the 100-day moving average are sort of turning around, turning down, could go to 420. All right, so this is something to keep in mind. Tata Steel definitely looking bearish. Very good stop loss above 462. I know it is at 450 right now. You could get in 462, definitely a good stop loss. Even 456 could be. And if it breaks 440, then I think 420 is definitely a good possibility. You had a sort of triple top here, just to point out, or at least may not be very useful from a trading perspective, but from a learning perspective, triple top or even a head and shoulder top, uh, up sloping neckline broken, measuring implication of the head and shoulder has definitely been achieved, and further downside is definitely possible, right? So that is Tata Steel for you. And I'm looking at VEDL, Vedanta. So if you remember, about I think 3 weeks back or a month back, we spoke about this bearish divergence and we're talking about how metals were topping out. Well, you finally can see that here, a big gap down Let me just make sure there's no data. 4 and 11, sorry. Yeah, 10th and 11th, big gap, attempt to close the gap, and then just falls. So almost from 280 levels, it's fallen to 230 levels. And again, you can see that sort of a similar picture from Tata Steel and Vedanta. I think this will fall to 215. You can put a stop loss at around 240, 242. So what has not fallen, as we saw, is Hindalco, though it did break down here, but it hasn't fallen as much as the other metals back in the Nifty. But clearly this is where a good resistance on Hindalco is as of now. So we'll have to, that's definitely a good resistance for Hindalco. This looks like a feeble attempt to take it up. So Hindalco, I think, is a really good short that is there in the metal pack. Okay, let's see if we've got anything else. So yeah, there we have NMDC, right? Alright, so NMDC already fallen from 150 to 125, and as you can see, beautiful double support on 125 psychological mark. 125 is the 200-day moving average, and it had gone up all the way from 80. So 80 to 125. Correction is, well, I think this one is just better to wait and watch. Does it take support here and go up? Let's look at how the volumes did this. Not too great, right? So I would expect further falls on NMDC. If it goes anywhere to 130, 135, that will be a good place to short it with a stop loss of around 134, 135. Again, target of 126, 125, and 125 breaks, then 120 and even 115 are distinct possibilities, right? Okay, so not a single thing in the metal pack is looking bullish. Coal India, though strictly speaking, of course, not metals, often studied with that. Whoa, what happened here? 10th and 11th. Oops, sorry, 10th and 14th March. Just wondering. Okay, fine. I was just wondering. Long weekend. Okay, so where's Coal India? Yeah. So big gap, massive gap here. Was there some volume selling? Yep, something happened, and it just sold off. 290 was a support for some time, could not hold it. Now even this support of 280 has broken. Okay, pretty important support from 2011, and well, this could definitely go to 270, maybe even 250. We'll have to wait and watch. All right, so that's a big fall. Went back to 290, 290. You can see how strong the red candles are. Really strong red candles is just being beaten down, no doubt about it. I think the really important thing is to see if it breaks 272. By the looks of it, tough to say. Volumes have definitely considerably come down. I really doubt somehow that it's going to go up. Stop loss on a short above 284. At least 270, and if 270 breaks, then I think even 250 are distinct possibilities on Coal India. Okay. Hmm. Alright, so that's it about the metal side. Uh, just to bring this back up again, Kane India, we had mentioned it, we looked at it and we said it's possibly a shorting opportunity. We didn't finish, what did we mention? Yeah, sorry, getting a little hot in the afternoon, my brain's not working that well, but anyhow. Okay, so Kane India, as you can see, negative divergence finally, happened. It has really, broken down. Uh, the uptrend is, very clearly over on really good volumes, likely to go down. Good stop loss at around, 292, 293, 280 breaks, then 275 will break, and then it will keep falling, 260, 255, etc. Right. So that's Kane, and in the same sector we have ONGC. So ONGC has been falling and falling from about 210 levels. It's come to 180 levels. Okay. Oops. Wondering where the studies came from. Okay, this is all pre-corporate action studies which were kept there. Unfortunately, this is one problem with these softwares, that you can't really the studies don't adjust for corporate action. So many of these stocks have had corporate actions. Okay, so this was probably there, and this is there, and this is somewhere in this zone. All right, so it's really entered a support zone as such, not really a level to be specific about, so that makes trading this really tough, right? If there is a support level, as in a number easy to identify, then it's fine. But if there is a zone, like in this case, then it becomes just very tough to say where support could happen. So you've got an inverted hammer that happened on Friday. Definitely long way from a turnaround. Um, Very feeble volumes. We'll just wait and watch. Nothing on the indicators either to say that there is some strength. But if you had to trade ONGC, then it'll definitely be on the short side, right? 170 could be a target before we see some support happening. Okay. Yeah. I was wondering why. Okay, so the thing is that we have discussed this with HPCL, BPCL, etc. And yeah, that's over. So it's okay. So looking at Reliance, sort of not really in the same boat, but nevertheless, so Reliance story continues to be bullish. There is no doubt about that. Right, so it broke off, as you know, if those who've been regular on the IMRs used to have made some good money on Reliance. So it's gone off from 1040, 1050 to 1440 with two corrections in between. Looks like the correction is over. Again, you've got an increase in volume, and if 1450 breaks on Reliance, then we're going to see much higher levels, all the way to 1500. And like I said, over the coming year and maybe much earlier than that, you will probably see 1600, 1650 on Reliance. The Geo thing seems to have not perhaps gone as well as Reliance would have liked, but in terms of subscription, but I think they're going to do whatever they can to make it work. So let's see. All right, so this is Reliance. Continue to be bullish on it. Right now you can definitely say there's a stop loss below 1344 and above 1450. If it goes up on good volumes, definitely a buy. As you can see, the volumes have already picked up on Friday, and well, if this continues, then Monday, Tuesday are coming, you should see further rallies on Reliance. Okay, now let's come to our IT space, or maybe we'll do that last. Let's look at the FMCG space. Right, so looking at FMCG, starting with ITC. So ITC had made a new life high, of course, but somehow unable to hold on to it. Very interesting to see such a specific range or level where it just does not seem to be able to cross. So that's where ITC is, and Friday really big red candle volumes. I thought, I was half expecting to see much higher volumes, but definitely high volume selling. And if it breaks 272, which I think it will, then 263 and even 255 are clear possibilities. Anything where ITC tries to go back to 280, 285 on low volumes, one should short again and see um, use 286, 287 as a good stop loss, and then use that as an opportunity to sell off or short. Doesn't look like it's going to go up too fast right now. Okay. Oh yeah, I think I really forgot to mention this at the beginning of this IMR. This is result season, so please check on the company's result. Look at the result calendar and see how that is stacking up. Okay, so then looking at Hindi Unilever, well, that also really has been correcting for about 2 weeks, and Friday was a big uh, bearish candle. Looking at the low volumes, I'm suspecting that something happened on ITC, and this one also reacted to that. Important support at 900, which by the looks of it, I think will get broken. Good stop loss above 922, sorry, and 900 breaks, then easily 890, 880, and 870 become real possibilities. All right, so that is HUL, and again, just looking at HUL in this screen, you can see that for about 2.5 years, it's really not done well. Been consolidating for almost 2 years right now. Okay. So no view on HUL right now. It could take support at 900, and if it goes above 940, it could break out. So we'll leave it at that. Okay, there's really nothing else in the FMCG space as far as Nifty is concerned. So now let's move on to the capital goods space, looking at L&T. So this was one place which was really bullish, right? Capital goods, and you can see that L&T really has shot up from 1550 to 1700. Amazing move, massive volumes, and I would definitely look at this as a flag, and I think so. One flag here, another flag there. Even if this corrects, and it could because the overall market corrects, I would not want to short L&T, that's for sure. This looks like it could well break out. If anything, one should be long on it. It's not very far from its life high of 2015 at around 1875, and if it breaks that, then I think 2000 really become possible for L&T. Right. So this is really interesting. So in this next Nifty capital goods BHEL, you can see that it's been going up. However, last 1 week you can see a sort of more bodies in the candles. more shadows, so bull bear fight definitely getting stronger, and we'll have to wait and watch and see how this really pans out. BHL, little circumspect. I would stay away from it right now, but LNT would definitely be long. Okay, then I forgot to look at Bosch, I think. Yes, okay, so Bosch, again, what a multi-bagger. 200 rupees stock is 22,000 rupees. 200 rupees in 2000, 22,000 in now. And this is a pretty big, long sort of triangle that we are seeing here, right? Okay. All right. So 2-year symmetrical triangle on Bosch. You can see it on the weekly chart and on the daily chart. So uh, in the longer term, I would definitely expect this to sort of break out onto the top side. So anytime it breaks out at around 24,600, then I think 27, 28,000 is easily possible. In terms of measuring implication from 26 to 16, we're talking about 10. So 34,000 rupees, maybe it takes 6 months, a year to get there. But yeah, we could do that, but only after it breaks out. So we'll just have to be a little patient about that and see how it goes. On the other hand, if it does come to around 21,000, 21,500, could be a good buying opportunity for longer term investors. Okay, so that's Bosch, putting that in the sort of capital goods space. Looking at one sort of odd stock here, Z, Z Telecom. So right, almost at its life high. If you ignore the .com boom thing, really interesting as to its moves. Could still be a buying opportunity, this one, with the stop loss at below 2515, and if it breaks 550, then definitely it is going much higher, but I think I'll just stay away from that for now. Okay, looking at the IT space, TCS, right? So H1B thing has definitely changed, and it is definitely going to affect the IT companies. So you can see in a short-term downtrend, there's been sudden buying on TCS on Wednesday, really surprising. But I think this will probably go down. May not be the best trading setup because of its consolidation sideways. It's in a support zone, so maybe it's just better to ignore it. So let's see if we can get something else. Well, there you have it, Infi. So Infi also has been consolidating, but it's looking to me like it's getting weaker. TCS is definitely showing strength. It's sort of a ladder type fall. It goes there, falls, goes there, falls, goes there. Here, of course, there's no ladder. And then here, what would be really important to note is, does it come to these levels, and when it comes to these levels, then what does it do? I don't think the pain is over. I think this will fall. So one of the things is this could become a sort of triple bottom, but whether this triple bottom will hold is, I think, really a moot point. 900, one should review it at that time. But if 900 breaks, then really a good shorting opportunity, I believe, because really the next support is only at around 850, and good support only at 825. Right? So you could go short on this with a stop loss on 938 or something, 939, and 850, 825 could be the next targets. Tech Mahindra, well, there you have it. It's from 500 just fallen to 420. Again, it's coming to this sort of zone, triple bottom. Now whether it will hold that, already the stock is down from its life of 740 to 400, 410. I don't think somehow that this is going to really be able to hold out. Though this is definitely lower volume, selling lower. It is not low volume, lower compared to that part, but not really low volume. And on the weekly chart, you do have a hammer that will turn around. I somehow will have to wait and watch. Very interesting. This would actually be so on Monday. I think one really good trade you can perhaps look at is see how it if it goes above 435 or something on good volumes, then it's a long. On the other hand, if it goes there and turns back down, then it's a short with a stop loss at around 435 and comes down to about 415, and then maybe even 410. And if 410 breaks, then I think in a sense this entire consolidation zone for 1.5 1 year, right? So about where are we? 510 to 410, another 100 rupees, so 310, about there is something that could happen maybe in a quarter or two, right? So we'll definitely not rule that out. All right, so that's Tech Mahindra for you. Be good to see how that pans out. Wipro, surprise, surprise. So that's really been going up. As you can see, TCS Wipro showing strength. And what's really interesting about Wipro is that do we expect this moving averages to hold, and will this um, you know um, provide enough support for it to go up, or is this just a temporary support here? Can we short this at around 5, or even though it's 491 now, 505, 506 is a good stop loss, and it falls back to 460, and then we review. Be interesting to see how this pans out. I think we just for now maybe wait and watch and observe. Move to weekly. Yeah, I think this is likely to go back down to 470, 450, and then we'll review after that. Okay. So yeah, I think we've come to the end of the Nifty stocks. Just scanning the list quickly to see if we forgot anything. Yeah, Power Grid, NTPC. Let's look at that. Power Grid going up, and I think yeah, wow. Okay, this is really interesting. Power Grid is at close to a life high. Made a new life high, as a matter of fact. All right. So interesting. You had a very good volume spike there. Consolidation for about 6 weeks. It's gone up 215. Probably come back to 200 or maybe even 205, and then maybe it goes back up to 210, 215. We'll have to wait and watch. Right. So Power Grid. This is a daily chart and a really good. You know, you've got a trend there. No doubt about it. So if it maybe comes back to this trend line or whatever, then we can see that the hesitation in the voice and the thought is basically because the overall market is bearish, and giving you don't want to get too aggressive on the long side in an overall bearish market. You never know when things suddenly turn around. It's best to be more in line with the overall market than to be against it. However, some individual stocks like HDFC Bank, like this, will do their own thing, and then you've got to take a call on that, on how you want to participate in those stocks. Okay, NTPC. Oh wow, NTPC. Oh, that's interesting. NTPC, just put it on monthly charts. So clearly, one 3-year, 4-year downtrend over. Now is it in a sort of longer term uptrend? Yep, there you have it. So this could be a pretty good uptrend, and it's got a lot of lower shadows on the monthly chart. So on the weekly chart, again, as you can see in the last candle here, it's been bought back quite nicely, and on daily you can see that for the last 4-5 days really good buying has been there on very strong green candles. Right, so power grid, NTPC look like the power generation or the public sector, something cooking there. Definitely a long here, stop loss below 161, 160, and once it clears 169, 170, then 175, and once it clears 180, then this is definitely going much higher. Okay. Okay, so 180 is definitely critical. You can see a lot of price action there, price and support and resistance 7-8 years back. 180 breaks, then this will probably steadily keep climbing all the way to maybe 220 types. Right, and definitely this is the trend line to watch. Right. Okay. So NTPC can be taken long at for longer term investors. Stop loss is below 157, otherwise above 170 it will go to 175, 180. Tata Power. So there's something about power stocks. Last week some Supreme Court case, I'm not sure what the details are. I'm not looking at the news much, doing mostly my own FA and TA, and trying to cut down on news and all that. So was at 90, that one day crashed from 90 to 81 and then recovered again, and then seems to be settling down as of now. So this massive volume, not sure how it will pan out, but there's definitely some support at this level. Alright, so we'll wait and watch. Could be a buying opportunity, though I think this event, whatever it is a bit of a you know dampener, but lots of support long term moving averages, one could consider going long on this with a stop loss below 83, and then once it clears 86, 86.50, it should go to 88 or 89. Done. So with that we come to the end of part 2 of this IMR. So as you saw, really a mixed bag. We've got both longs and shorts, right? So depending on your preference, you've got both choices, um, and it'll be interesting going forward with all the events that are there that we discussed in IMR part 1, how the markets could either further go down or maybe sort of take support from various events, and then this weakness could perhaps get over, though like we said, looks like there's more downside left than the upside, right? So with that, come to the end of part 2 of this week's IMR. Have a great week ahead. Hope it's profitable, and catch you again in a week from now. Thank you and have a great weekend. Bye.